Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. Sign up for a 1-week free trial, no credit card required, for access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hello everyone, looking at PCLN, NVDA, Tesla, Netflix, and CMG on the daily and weekly time frame. So PCLN did break that double low of 1700, but the bulls bought the dip. The lower Bollinger Band support was there, so we bounced off of that and had a pretty strong close up near the high of the day. Still have that middle Bollinger Band resistance and still in a lower high pattern on the daily, so the bulls need to follow through and confirm this candlestick with another green day tomorrow if we want to be confident that this is our higher low. I am looking for this range to tighten up. We have our low, high of the bounce, higher low looking to form, and we're looking for this range to tighten up back into the upper 1700s. This weekly chart could easily see the bulls make an attempt here to change things. It depends if the market bulls stay in control, which as of right now they're certainly doing. With the sector rotation that has gone on the past 2 weeks, it has kept the bulls strong. So we have the higher low, and if we break 1777, that will give us the higher high, and we'll get over these exponential resistances, which is what the bulls are looking to do to try and change this momentum. But if we can't get over the daily middle Bollinger Band, none of that's going to happen. So that's step number 1 for the bulls. NVDA, a bit of indecision today with the gap up open. Not a ton of follow through. Support is 190.12. There is a little gap here. Actually, I take that back. We did fill the gap by 2 pennies. So resistance is 193.60. Anything under the high of the last bounce attempt, which you could view as, I look at the first resistance right at 200 psychological. 213 and 230 are those resistance levels. And we have a higher low, or we have a lower high, anything under those levels. So a nice bounce playing out, but it's not convincing. We're likely going to need a higher low and a higher high to change that trend in favor of the bulls. We are holding the middle Bollinger Band on the weekly that has held for the past 6 months. So that's a good sign. The bulls want as big of a lower wick as possible, showing bulls buying that dip. Checking out Tesla. Tesla formed a lower high compared to 320. So it's still a lower high pattern on the daily. We do have a higher low as well. So the range is tightening. Support is down at 300 psychological. And our new lower high is 318.63. That's the range to be watching. We closed at the low of the day after a lot of profit taking, so the momentum is favoring the bears into tomorrow. And we'll see if we close down towards the middle of this range, which would be at about 309. Weekly time frame for Tesla, increasing the odds that this is not a bear flag just a bit, with this week holding that support, 300 holding consistently, still rejecting from exponential resistance. And make or break is definitely coming soon as we're getting very tight and these moving averages are going to come to a flex point likely next week. Netflix was one of the weaker tech names today, and we were seeing a bunch of indecision with higher lows and lower highs. We did get a bull break. There was a nice bull entry today where we were looking for the equilibrium pattern to maintain, so higher lows kept forming. The 5-minute RSI was oversold when we were heading to 182.88 support, so we were looking for a potential bottom fishing play with that support level. And we did get some nice follow through from that bounce, but we rejected from daily exponential resistances still as the bulls were unable to close strong. The weekly time frame is trying to hold this middle Bollinger Band, which we very briefly lost back in June and July, but other than that, it's held for over a year. So losing this level is definitely a bit of a red flag. Key support 176.55, and we did hold that level just barely. 178.38 held as a higher low. CMG on the daily time frame, we were looking for a higher low to be established around the 300 psychological level. We got a bounce off of 305, and we were looking for this consolidation to be healthy because it was low bear volume. It was a bull flag pattern, and we closed up near the high of the day. If the bulls can break 314.59 tomorrow, they'll be heading into next week with a bit of momentum in their favor. The weekly chart does have a double top and a big upper wick of profit taking, but the daily chart is what we should be concerned with, because that is healthy consolidation, keeping the bulls in control after establishing that higher low following that 5-day big breakout. So that's what we got heading into this weekend. We'll see you then. Have a great night.